Welcome back to another weekly market outlook. This is for the 5th of February to the 9th of February 2024. There's a lot to talk about the data last week. I know there's a lot of stuff, in fact. Last week was a pretty jam-packed week. We saw with the Australian inflation number. Inflation number has come down a little bit from Australia. So we had a drop from 4.3% to 3.4%. That's a 0.9% drop on inflation, which is really, really quick for Australia. 3-month CPI also dropped 1.2% to 0.8%. This is a core CPI from Australia. And I think the main focus for last week was definitely what the FOMC statement is going to be. And I think we got a more hawkish tone. This is to be expected. I don't think there's FOMC pretty much shut down any potential rate cuts in March, right? And the earliest right now that the market is kind of pricing in would be in June. Pretty much for March interest rate cut, the probability has dropped from 80% to 20%, pretty much going to be zero soon as market continues to price in. So there's a lot to talk about in terms of the FOMC stance there. And I think one of the key note that they mentioned was, the economy in the US is doing good. Why do we want to change anything? Why do we want to disrupt it? It's doing really well. It's just, it's facing the inflation through. Inflation is coming off, but it's not as near to the 2% target. So they're likely going to keep interest rate higher for longer, and that's to be expected. That's basically what our views were pretty much throughout the end of last year until about now. So we got that official confirmation coming out from FOMC, and then we have the Bank of England interest rate decision. We got one vote for a rate cut. Overall, the Bank of England was kind of a little bit more on a neutral dovish side. They did mention the concern that they have is that the UK economy, unlike the US economy, could actually drive into recession much faster than all the other countries compared to like the Eurozone and the US economy. So I think the concern from the Bank of England is that, they're not looking into interest rate cuts soon, but they could actually do that, and we already have one vote for a rate cut at this meeting. So it doesn't look good at all coming out from the Bank of England. They can remain more on the hawkish comments, but in reality we do have that one vote for a rate cut. So right now, comparison to the Bank of England to the FOMC is in a place where they can be hawkish. The Bank of England is not in a place where they can be hawkish. Just comparing the economics between the two countries there, between the US and the UK. All right. Lastly, we have the superb NFP numbers. So let me break down the NFP numbers for a little bit. So we have the previous numbers from 216,000 that was revised up to 333,000. And then the consensus for this month was 187,000. We got 353,000. So in essence, the previous number which was really high, which is the December number was really high, that was revised up to 333,000. And then for the January number, it was up 353,000. That's nearly double what the consensus is. So that's a very significant gain in terms of the NFP. This is a strong US NFP numbers. And then we have the unemployment rate. The consensus was for unemployment rate to pick up from 3.7% to 3.8%. It remains stable at 3.7%. The average hourly earnings, though, this is also a little bit of a shocker. So we have 0.4%. It went up to 0.6%. This is beating the consensus of it dropping down to 0.3%. So all three data are pretty much indicating a very strong labor market in the US economy. So obviously that drives the US dollar. And it's pretty much in a one-way movement when we'll take a look at the technicals later on. But yeah, it's undeniable that the number is surprisingly good. It's surprisingly good. It's very rare that we actually get the previous month's revised up, by 100,000, and then the monthly numbers actually beating out the consensus by nearly double. At the same time, the average hourly earnings also go up. So this is actually a very rare occurrence in the employment numbers. It's very rare that we actually get this combination to happen. Okay, so this week we are looking at a little bit of a quiet market. So we already have the comments coming out from Fed Chair Powell. That was actually the 60-minute CBS interview on Sunday, I believe. Yeah. in the US, and we already have that. In terms of the comments, it's pretty much the same thing. Inflation update, progress is actually being made, but the goal of full price stability hasn't been reached yet. So the Fed's still eyeing firmly at the 2% target. Interest rates wise, decision will be made, will be data driven with a careful approach to ensure economic strength and job market vitality to continue. And the economic outlook itself, it's kind of optimistic with a little bit of a caution, more of a balanced view on navigating inflation reduction without triggering a recession. So that's basically kind of the gist of what the interview was overnight. All right, so we have the ISM Services PMI from the US tonight. We're still expecting the numbers to kind of increase from 50.6 to 52. Australian interest rate decision tomorrow is still going to be a no change, but we are kind of anticipating what the statement is going to be for Australia, considering if they actually going to mention the drop in inflation numbers last week from Australia as well. All right. And yeah, that's pretty much it. In terms of the data, we don't actually have much of a high impact data this week. We have the New Zealand employment numbers, we have the Canadian employment numbers, but that's pretty much it. The usual stuff, the weekly unemployment claims for the US, that's still going to be part of the data for this week, but we don't have a significant amount of data compared to last week, which was a very jam-packed week, both on the economic fronts as well as on the earnings side as well in the US. All right, let's take a look at the Australian dollars. So this one was capped by the fair value gap, and that was basically our guidance for the Australian dollar throughout the past few weeks. We finally break below that bullish order block. Price has now transitioned below 65 cents at this point in time. We are currently looking at further drop to the downside. In terms of how far it can go, the room to go is actually support 3 on the weekly pivot, which is at about 63.50. But let's just be a little bit more realistic. We're looking at a little bit more support coming in about 64.50 and then 64 cents before it goes to 63.50. But yeah, price is currently trading below the pivot level, so 65.50 where the pivot is going to be, that's going to be our major resistance for this week on the Aussie USD. All right. Next up is the Euro USD. So we have finally moved away from that range. We did finally see the price breaking below 1.08. We do have a little bit of support coming in at 1.0750, but looking at the current transition on price here, 1.0750 where the support one on the weekly pivot is located. That's also where the previous support in December is located. This is going to be a key level to watch out for. Price might actually bounce off 1.0750. It might actually retrace all the way back up to 1.0850, but our views on the Euro USD hasn't changed. We're still aiming for that move towards 1.07 and 1.0650 on the Euro USD here. The Pound USD, same thing. We finally move away from 1.27, which was really sticky on the Pound USD ever since the year start in 2024. So we move away from that. We also move away from 1.2750 resistance level. We are now at about 1.26. Now, as we previously mentioned, moving to 1.26 basically just indicates a move inside the Ichimoku cloud. So let me go back to the Euro USD here for a little bit. We can see the Euro USD here and the Aussie USD. We have actually transitioned below the Ichimoku cloud, but for the Pound USD, we are actually within the Ichimoku cloud. So no signs of a potential reversal as of yet. We're still looking at support coming in at 1.26, but I think a lot of traders are still going to be eyeing that move towards 1.2550, and below 1.2550 there's going to be 1.25 where the order block is located. So the order block itself is actually pretty big. It's actually between 1.25 to 1.2550. So we're actually looking at more of a push lower, but once it reaches 1.2550 range, it might actually slow down a little bit. It might actually be trapped in more of a range bound market condition. Now, again, the current condition is that this is actually within the Ichimoku cloud. It's a very thick Ichimoku cloud here. We're looking at about 2-3 cents in terms of range here on the Ichimoku cloud. So we're not expecting continuous trend to the downside for the Pound USD. We might actually see a little bit more of a choppy market for the Pound USD, and it's likely to remain choppy. We do have that 1.26 level. Again, if a break below 1.26 is likely going to be limited to 1.2550, and then we are looking at a lot of support coming all the way down to 1.25. The potential scenario where the trend might actually reverse into a downtrend would actually be a close below 1.25, but we're still far away from that scenario at this point in time. All right, so in terms of resistance, obviously we still have the pivot level at 1.2675, but beyond that, we're looking at 1.26 to 1.27 and up to 1.2725 as our potential resistance for the pound USD. All right, the last thing is the dollar Japanese yen. So for dollar Japanese yen, this one here, despite the good numbers in the US fundamentals, this one here is still being capped by 148.50. So I think today and tomorrow, I think a lot of viewers are going to be looking at 148.50 as a potential breakout level on the dollar Japanese yen. We basically need a daily close above 148.50. If that daily close above 148.50 happens, then that would be a telltale sign of this one moving all the way up to 150, 151, and potentially 152. So this one here is still bullish. And considering where we bounces off the market last week, it bounces off the Ichimoku cloud. It also bounces off that range between 145 146. A lot of orders got picked up at 146, so you can clearly see the demand there for the dollar Japanese yen, especially Friday's move there. It moved away from 146.50 and kind of just skyrocketed up above 148. So that's a very good bullish impulsive move on the dollar Japanese yen. So we're still very confident on the dollar Japanese yen that considering the interest rate differentials as well, considering the comments coming out from the FOMC as well, that they are being hawkish and the economic data kind of supports that, we're still looking at a potentially bullish dollar versus Japanese yen, just on the fact that the interest rate differentials between the FOMC and what the Bank of Japan is, it's just so far apart, and we got more hawkish confirmation. And then on the other hand, we have the Bank of Japan remaining dovish at this point in time. All right, so we are looking at that break above 148.50. In terms of support, we are looking at 148 and 147.50, but we don't expect price to drop down below 147 anymore at this point in time. So yeah, this is still above the Ichimoku cloud. We have transition above the Ichimoku cloud, pull back to the Ichimoku cloud, so the correction is done. We have already bounced off the Ichimoku cloud, so we're very much looking forward to that move towards 150 and potentially all the way up to 152 on the dollar Japanese yen. All right, so with that, good luck with your trades, and I'll see you soon.